China, which is buying gold like there is no tomorrow.
China has overtaken India as the world's biggest gold buyer as of last year.
Could China's central bank be moving towards a gold standard?
The Chinese economy has been hit by a series of blows, including a real estate collapse and a trade war with the US.
Gold has always been a safe place to invest money during difficult times of war or economic troubles. We saw this during World War I and World War II. During those wars, a lot of gold flowed from European countries to the United States. This happened because countries needed gold to pay for goods like weapons, food, and other supplies from the US. Back then, every dollar was backed by a certain amount of gold under the gold standard system. So gold could be used like money to buy things internationally. If a country wanted to buy American goods, they needed to pay in gold. After World War II ended, the US ended with most of the world's gold reserves. The US dollar became the global currency that other Western countries used for trade. But the US started printing too much money that wasn't fully backed by its gold reserves. Eventually, in 1971, the US president at the time stopped allowing dollars to be exchanged for gold. This ended the Bretton Woods system where major currencies were tied to the US dollar's value in gold. More recently, during the Russia-Ukraine war in February and March 2022, we again saw investors buying gold as a safe investment due to the uncertainties caused by the war. This follows the historic pattern of gold being a stable place to park money during conflicts and economic turmoil. One country that really values gold is China. China already has the 6th largest gold reserves worldwide. But according to the World Gold Council, in just the first 3 months of 2024, China added another 27 tons of gold to its reserves. And why is China then buying so much gold? Who is buying the gold? Apart from the Chinese central bank's huge appetite for gold reserves, we are seeing robust domestic consumption of gold in China as well, particularly for jewelry, gold bars, and coins. In fact, China is now both the world's largest producer and consumer of gold. What's really fascinating is the surge in retail gold buying among China's youth since the beginning of this year. Traditionally, it was middle-aged women in China who drove demand for gold jewelry. However, a new trend has taken shape where young customers in their 20s have been snapping up gold beans. These gold beans are tiny pea-sized pieces of gold weighing about 1 gram each and costing around 600 yuan, $83 presently. While these youngsters may not have enough disposable income to purchase full gold bars or coins, they are enthusiastically collecting and stashing these miniature 1 gram gold pieces in glass jars. It's almost like a modern-day version of collecting marbles during childhood, except this time it's a gold bean rush sweeping China's youth. There's an intriguing mentality emerging where these young people view acquiring small affordable increments of physical gold as a way to gradually build up their personal wealth and savings. The real question is, why do these budget-conscious youngsters feel that accumulating gold beans is a better investment strategy than putting their money elsewhere? What is driving this new cultural phenomenon of micro-gold ownership among China's Gen Z population? Lack of trust in previous investment methods. For years, the Chinese government actively promoted investing in real estate as a way to stimulate the economy, create jobs, and maintain social stability. People jumped at this opportunity, buying up properties not just to live in, but to try and resell for profits down the line. This fueled an unhealthy oversupply of housing across China. However, by 2015, the housing bubble had become overinflated. To try cooling down this overheated real estate market, the government tightened lending rules and made it much harder for people to get home loans. This slashed housing demand, leading to plunging property prices and causing several major developers to default on their debts. The stunning drop in real estate values shattered confidence in a sector that was once viewed as a surefire investment. The housing crisis then triggered a domino effect of economic troubles, reduced investment, job losses, and an overall slowdown in growth. If that wasn't enough, the Chinese stock market has also been on a downward spiral for nearly a decade now. The Shanghai Exchange has struggled mightily, eroding investor faith in equities as a reliable store of wealth and returns. With two of the biggest mainstream investment options, real estate and stocks, having failed the Chinese public in recent years, people began seeking alternatives to safeguard their savings. This is where the unique gold bean trend amongst China's youth took root. No longer able to afford properties or risk money in a stumbling stock market, these young investors are building wealth incrementally by purchasing tiny 1-gram gold pieces called gold beans. Costing just $83 or so each, these miniature gold nuggets can be steadily collected and stashed in jars. What seems like just a quirky cultural fad is actually reflective of a new investment mindset born from recent economic realities. Having witnessed the boom and bust cycles of real estate and equities firsthand, China's younger generation is embracing gold's role as a trusted safe haven asset. By incrementally accumulating these affordable gold beans, they can methodically create a personal store of value while hedging against any future market volatility or economic uncertainties. It's a modest yet prudent investment approach perfectly suited for the times. Challenges in forex trading in China. Here's an engaging rewrite using simple language about how China's forex trading restrictions are another factor driving demand for physical gold investment. In many countries, individual investors can easily buy and sell foreign currencies through private brokers. However, things work quite differently in China when it comes to forex trading. The Chinese government imposes strict rules and limitations on its citizens investing in foreign exchange markets. People can only conduct forex transactions through authorized commercial banks, not private brokerages. On top of that, there are annual quotas capping how much foreign currency an individual can purchase each year. These forex restrictions are all about controlling the flow of money leaving China and maintaining stability for the nation's currency, the yuan. With such tight regulations around exchanging and holding foreign currencies, Chinese investors have very few alternative options to grow their savings outside the domestic market. Stocks, real estate, we've seen how confidence in these traditional investment channels have taken a beating in recent years. And unlike some other countries, Chinese citizens can't easily move their money into international markets either due to the capital controls. In this highly regulated financial environment within China's borders, one of the few viable investment havens available is good old physical gold. Unlike trading paper assets tied to foreign currencies, which is restricted, owning real, tangible gold circumvents those capital outflow limits. It allows Chinese investors, rich or poor, to build up a hard asset reserve using their local yuan savings. This is precisely why we are witnessing the fascinating gold bean trend, especially among younger, budget-conscious buyers in China. By incrementally purchasing and collecting these affordable bite-sized 1-gram gold pieces, they can gradually grow a personal investment portfolio that transcends China's closed capital borders. When traditional investment avenues are constrained, exchange controls restrict money flows abroad and forex trading faces heavy regulation. It's no surprise that physical gold emerges as the logical, hassle-free investment safe haven of choice for many Chinese. The simplicity and freedom offered by being able to accumulate gold at one's own pace makes it an immensely appealing prospect compared to the red tape surrounding other investment options. And now, why is China's central bank still buying gold also? One major reason is that China is slowly cutting back on how much US debt it owns. As of April 2024, China holds a massive $797 billion of the US national debt. For the past 20 years, China and Japan have been the biggest foreign owners of US debt. What this means is that China has essentially loaned the US government a huge amount of money by purchasing US Treasury securities worth $797 billion. However, that is still less than 1% of the total national debt owed by America. Rather than keeping such a large stake in US debt, China's central bank has started selling off some of those treasury holdings to other countries or big investment firms willing to buy them. The reason? If the value of the US dollar declines, China could lose money on that debt investment. So by reducing its exposure, China limits that risk. The money that China gets from selling the US debt is then being used to buy gold and other currencies. Diversifying into assets like gold helps minimize risks if the dollar's value drops significantly. This shift also signals that China may want to become less reliant on the US economy. That way, if something negative happens that impacts the US, China's finances won't be as affected. But there's another crucial angle here tied to the Russia-Ukraine war. When Western nations imposed sanctions on Russia, they froze a big portion of Russia's foreign currency reserves held in their banks abroad. So even though Russia technically owned that money, it couldn't freely access and use those frozen funds, like putting a lock on part of Russia's overseas savings account. China is very aware that the same thing could potentially happen to its foreign reserves, especially given tensions over Taiwan. Western countries are strongly supportive of Taiwan's autonomy, so if China ever needs to negotiate with Taiwan forcefully, the US and allies could retaliate by sanctioning China and freezing its foreign currency holdings, just like with Russia. This massive increase in gold purchases by China is a clear sign that they want a financial asset that can't be easily frozen or sanctioned by other countries if geopolitical tensions escalate. It is an indication of potential confrontation brewing with the United States over issues like Taiwan's status. Only time will tell how the strategic stockpiling of gold by China's central bank may influence that situation going forward.